Interest rate pressures and the collapse of a bank in the US wipe off $57 billion from the value of Australia's Big Four. The battle over the spoils of the $368 billion submarine contract begins, and business conditions remain strong even as consumer sentiment hits new lows. It's Wednesday, the 15th of March, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. Very busy, 24 hours or so.
This has been a very big week, Sean.
Sure has. And I tell you what, some of the numbers being thrown around in that defence contract, incredible. Hard to get your head around.
Yeah, we'll get into that one in a second. I'll mention the interview that we've got coming up a little bit later on. It is with Paulo Costa, who is a senior behavioural economist at Vanguard.
Yes, it's all about the FIRE movement. That's Financial Independence Retire Early movement. Basically what you need to do if you want to retire early. And many people do want to retire early. So well worth a listen with Paulo about how you can go about doing that. Even if you don't want to retire early, it's just fascinating, the kind of the behavioural economics behind saving. And we talk a bit about that. It's fascinating.
Yeah, it's a good one. It's coming up a little bit later on. The main story this morning, though, Sean, the share prices of the big banks on the ASX have tumbled, with $57 billion wiped off the value of the banks over the past 6 weeks on the back of higher interest rates, political pressure, and, of course, over the weekend, the collapse of a US bank.
Yes, that's about $10 billion a week. Bank stocks have tumbled, none more so than the Commonwealth Bank, which, of course, is Australia's biggest bank. It triggered the sell-off when, at its half-year earnings announcement in mid-February, it said net interest margins, the difference between what a bank receives on loans and pays out on deposits, had peaked. Since its high about 6 weeks ago, Commonwealth Bank's share price is down 15%. That's worth about $27 billion. Now, yesterday, Commonwealth Bank's share price closed down slightly to $95.01. That's its lowest close since October last year. There's more to it than net interest margins. The banks are coming under political pressure to pass on higher deposit rates following Reserve Bank decisions to lift official rates. Politics and the banks don't always mix, and that's made some investors very nervous. And finally, over the weekend, the collapse of Silicon Valley Bank in the US hit most bank stocks around the world very hard. In fact, over the past 2 days, global financial stocks have lost around $700 billion in value, according to Bloomberg.
Sean, that's interesting what you said about politics and the banks not always mixing. Is it kind of a general wariness of politicians putting pressure on the banks and the potential then for kind of additional regulation, that kind of thing?
That's exactly what it is. What we've seen in the past few weeks are politicians coming out saying, hey, banks, you should be passing on higher deposit rates. We've had the Australian Competition Consumer Commission come out and say, we're going to inquire into that. Treasurer Jim Chalmers has spoken about it. The banks themselves, the last thing they want is regulation. The last thing they want are any rule changes around that sort of thing. But they're obviously feeling the pressure because following that last rate rise last week, we saw deposit rates rise as well. So there's a bit going on there.
Yeah, and they seem to actually follow through with those very, very quickly in some cases.
They did.
Now, locally, Sean, it hasn't just been the Commonwealth Bank that have been feeling the losses. What about the others?
Well, National Australia Bank's off 12%. That's wiped off about $12 billion from its market value since its peak in February. ANZ and Westpac are both off around 11% since their February peaks. All in all, nearly $57 billion has been wiped off the value of the big four banks. Suncorp is the next biggest retail bank. It was down 3.5% yesterday and it's off about 8% since its February peak. Bendigo and Adelaide Bank and Bank of Queensland are sort of in similar situations. I haven't mentioned Macquarie Group because it's a different beast. It has a retail bank, but it's also got plenty of other businesses. It was a really poor performer yesterday. It fell nearly 3% and it's down nearly 6% since its February peak.
Sean, if the banks were down yesterday, it's a fair bet, I would imagine, that the rest of the market tumbled.
Yes, that is a good bet. Overall, the S&P ASX 200 closed the day down 1.4% to 7,009 points, though for most of the day it traded under that 7,000 point mark. Tech stocks were sold off hard. Market leader WiseTech Global fell nearly 3%, while two of the worst performers in the ASX 200 yesterday were BrainChip Holdings and Computershare. Energy stocks took a hammering after the price of oil tumbled to levels last seen late last year. BHP and Fortescue both fell nearly 2%. There are plenty of other poor performers, Michael. Diversified miner South32, QBE Insurance and gaming manufacturer Aristocrat Leisure all lost plenty. Once again, the big winners were the gold stocks as people rushed to the safety of the precious metal. Gold is trading back above $1,900 an ounce, and that helps stocks like Newcrest Mining, Northern Star, Ramelius Resources, and Perseus Mining.
What about international markets?
I'm so pleased we got to this. The global bond market, Michael, is fascinating at the moment.
See, again, overreaching slightly, but
please.
But please. You know what? I say that and I don't actually believe it, because at the moment, the global bond market is actually really interesting.
It is, because it's actually forecasting that the era of higher interest rates is over. Full stop. Bond yields reflect expectations about future interest rates. Short-term bond yields are now below official interest rates in many countries: the US, Canada, Europe, the UK, Australia. That tells us that investors think rates aren't going to rise much more and could actually start falling this year. This is all on the back of the Silicon Valley Bank collapse that we've been speaking about over the past couple of days. Locally, bond futures suggest that rates won't rise again from the 3.6% cash rate that the Reserve Bank instituted last week. Now, a week ago, bond traders had priced in 2 more rate rises, another 50 basis points. Now they've priced in 0. It doesn't mean central banks are going to stop lifting rates. That's up to the bosses and boards of those organisations. But professional investors are betting big licks of money that rate rises are coming to an end. Surely, Michael, that's got to fit into the category of fascinating.
It is fascinating, but I am going to exercise my power of veto over the use of the term big licks of money.
Yeah, no, fair enough. I'll go with you, but I do kind of, it's very kind of Wall Street, isn't it? 1980s Wall Street, Michael Douglas style.
Yeah, it is, but just big licks of money. It's just a little bit icky, don't you think?
Michael, we don't all have your mind.
All right.
What I have found interesting recently, Michael, is the amount of social media that we've been getting. And we're just going through a period where Fear and Greed listeners are responding, and we love hearing from them. Many of them are complimenting you on your tangential discussion about serious issues, like me talking about the bond market and you coming out saying, I don't think you should say big licks of money.
Or when we were discussing a basket of currencies the other day, and I asked you whether it was a wicker basket or one of those supermarket baskets that have got the dirty stains in the bottom.
How to bring some levity to otherwise serious topics.
Yep. Anyway, we'll be back in a moment with the rest of the day's business news. Sean, the fighting has begun over the spoils and fallout from the federal government's decision to spend up to $368 billion over the next 3 decades to buy, build, operate and maintain a fleet of 8 nuclear-powered submarines.
Yes, the massive spend, the biggest procurement deal ever, has already set off debate among states about who's getting what, and it's also put in peril the improving relationship between Canberra and Beijing. South Australia is the big winner, with all 8 nuclear-powered subs being built in Adelaide, generating about 20,000 jobs over 3 decades. Western Australia does okay too, with $9 billion going to Defence Department upgrades in the state. The government will also pick a site for a submarine base on the east coast, either in Newcastle, Brisbane or Port Kembla. We've seen New South Wales and Queensland already lobbying on that one. Now, China came out and is very critical of the deal, with its mission to the United States calling it a blatant act that undermined the international non-proliferation system, fuels arms races, and hurts peace and stability in the region. Experts say that the thawing of diplomatic relations, including Trade Minister Don Farrell's proposed visit to China in coming weeks, is now at risk, and the $20 billion worth of trade sanctions imposed in 2020 may take longer to dismantle.
So, Sean, these next generation submarines named SSN AUKUS, which is not the catchiest name, but I'm sure they'll come up with a nickname at some point.
SS Naucus.
Wow, Sean, SS Naucus. It is very rare that you derail me on this podcast.
Fantastic. This is the highlight of my day.
You have just done it. Wow, well played. And on such a serious topic too, because
right.
these are conventionally armed nuclear-powered submarines. They're based on a British design and incorporating Australian, UK, and US technologies.
Yes, Prime Minister Anthony Albanese and US President Joe Biden yesterday very quickly pointed out they do not carry nuclear weapons. They are nuclear powered. Now, beginning in 2027, the US and UK will establish Submarine Rotational Force West at Perth's naval base with one UK sub and up to 4 US submarines operating from there. By the early 2030s, Australia will buy at least 3 Virginia-class submarines, and later this decade, construction will commence on the first dedicated AUKUS-class boat. Now, construction is expected to take 12 to 14 years, with the first submarine to be completed in the early 2040s. It is the biggest defence procurement in Australia's history, you mentioned that, and we become the 7th country to operate a nuclear-powered submarine. We also need somewhere to put the nuclear waste. Now, the government has said defence lands will be used for that, but that undoubtedly will cause some controversy.
That is just a big story. Every element of this is big. The numbers are big. The political ramifications are big. The global, the geopolitical situation with China. There is just so much to this.
I wish I understood more about defence. I think it's incredible that you can take out a deal that's 20 years. I don't know why it takes 14 years to build a submarine. Am I kind of missing something there?
No, I'm surprised. It does always feel like we're talking so far into the future, and you would think that so much changes during that time, and even the technology involved would be kind of out of date by then.
Yeah, that's what I always think. Anyway, massive deal.
Indeed. Now, Sean, business conditions remained strong last month despite higher interest rates and inflation.
Business conditions is a bright spot on the economic outlook, Michael. The National Australia Bank survey released yesterday shows conditions fell a touch in February, though remain very strong. Trading conditions, employment and profitability all sit at historically high levels. So too do price and cost growth measures. NAB Chief Economist Alan Oster said consumer-facing sectors like retail and personal services are doing best. However, business confidence has stumbled, dropping 10 points to a reading of -4. Oster played it down really yesterday. He said business confidence has been volatile and leading indicators of activity have eased slightly.
Yeah, businesses are enjoying current conditions, but consumer sentiment is very, very weak for the second consecutive month.
Yeah, it sure is. The Westpac Melbourne Institute Index came in at 78.5 points. Now, readings below 80 points are very rare. In fact, they haven't been recorded since the early 1990s. But now the survey has had 2 months in a row of sub-80 readings. One of the most watched survey questions is how people respond to whether now's a good time to buy a household appliance. I know the Reserve Bank used to look at that. The index on that is at its lowest level in the near 50-year history of the survey. Mostly it comes down to interest rates. Consumers simply want an end to the rate hikes.
Makes sense. Sean, Australia's Newcrest Mining and Suter Newmont Corporation have agreed terms for a round of early-stage takeover talks. This ends a 4-week standoff that actually threatened to spoil the $20 billion plus deal.
The Financial Review is reporting that Denver-based Newmont settled on the all-important non-disclosure and standstill agreements in recent days. That paves the way for the two groups to talk for the first time since Newcrest rejected the $22.4 billion takeover offer. The talks are expected to see the Australian miner explain why it turned down the proposal and what sort of price the company and its board might be willing to entertain to grant official due diligence or, of course, sign a deal. The mini breakthrough comes less than a week after Newcrest's interim CEO, Sherry Du, said the two companies and their lawyers were still working on terms of engagement.
Treasurer Jim Chalmers yesterday said the local banking system is well capitalised and has plenty of liquidity amid the panic caused by the failure of the US-based Silicon Valley Bank.
He almost had to come out and say this yesterday. He said the government, Treasury and regulators were closely monitoring the situation and potential effect on the Australian financial system. Now, he met with the banking regulator, that's the Australian Prudential Regulation Authority, the corporate regulator, ASIC, and the Reserve Bank, as well as Treasury, his own department, on Monday afternoon, saying that Australians should be reassured that we have a resilient, well-capitalised banking system that has strong liquidity coverage. Let's hope so.
Yeah, it's interesting that you say that's one of those things that he probably had to come out and say. It would probably also then be one of those statements that people would be watching the language used very carefully, because he has to use the right words. He has to say exactly the right thing to try and just calm people a little bit.
Yeah, I think so. And I mean, I don't think anyone's really saying that the Australian banking system's in trouble because of what happened at Silicon Valley Bank, but it's just the sentiment behind it.
Yeah. Now, buy now, pay later player Sezzle has unveiled plans to list on Nasdaq on Wall Street in a bid to attract more US investors.
Yes, the group's been flagging a dual listing on the ASX and Nasdaq for a couple of years, and the announcement sent its share price up nearly 2% yesterday. The Minneapolis-based fintech last year was supposed to merge with fellow buy now, pay later group Zip. That was called off. Its financial performance has been weak, with the group in the process of closing its Brazil and European operations. A couple of years ago, Michael, Sezzle's share price was close to $11. Yesterday, after the jump, it closed at 54 cents.
Ooh, ouch. Sean, in international news, Chinese President Xi Jinping could visit Russia as soon as next week, but will also hold talks with Ukrainian President Volodymyr Zelensky.
Reuters is reporting that Xi could visit Moscow next week in response to a long-standing invitation from Vladimir Putin. Now, a visit by Xi to Russia would be a major event for Putin, who portrays the war in Ukraine as a conflict with the combined might of the West and has frequently spoken of his plans to host the Chinese leader. Russia relies on China to buy oil and gas that it can no longer sell in Europe. But if Xi's visit coincides with a video meeting with Zelensky, that could be an even bigger coup for the Ukrainians, who want Beijing to remain neutral rather than support Moscow. Zelensky has called on Xi to speak to him. It'll be very interesting to see how this one plays out.
Yeah, indeed. Now, in Wall Street's first trading day after the collapse and rescue of Silicon Valley Bank, US regional lenders were dumped by investors.
Yes, this is a bit like our main story, but it's worth a story on its own. The share price of First Republic Bank in the US, that's the 14th largest bank in the country, at one point in that first trading session fell almost 80%. Hard to get your head around that. The leading index for regional banks was down more than 10% early in the trading session, but then trading was halted in a number of stocks, so that index had to be halted. First Republic later resumed trading and its shares recovered somewhat, but it still ended up down 62%. A massive sell-off in bank stocks in the US.
Yeah, it certainly was. Finally, Sean, the Balinese government has banned Australians and other foreign tourists from renting scooters.
It's almost a rite of passage for Australian tourists in Bali to hire a scooter and zoom around. Have you ever done it?
No, I haven't. I've never even been to Bali, but I can imagine that if you did, it would be the thing that you would do.
It's incredibly dangerous and some tragic tales have come from it, but it's just thousands of tourists riding around on scooters. Anyway, officials in Bali are sick of illegal activities like, not wearing a helmet and driving recklessly. Australians are not the worst offenders in traffic violations. Balinese police said that of the 170 traffic violations by foreign tourists in the past week, 56 of them were Russians compared to 10 Australians and 5 Ukrainians. Now, under Indonesia's traffic laws, scooter drivers who aren't wearing helmets are fined at $24.50, while drivers without a license are fined $98. They're very minor fines, and I must say, when I was there last in Bali, not many people were wearing helmets. Anyway, almost 745,000 Australian tourists visited Bali last year. We are by far the number one destination for people going into Bali, and the government wants to crack down on the use of scooters.
We once hired those scooters in, of all places, Noosa. And this is why I would never do it in Bali, because on the very first roundabout, Shan nearly sailed into the front of a parked car. And that was within about 30 seconds of getting on the scooters in the first place. And that is with Australia's great road conditions, comparatively, and great road rules and respect for those road rules. So we would have no hope in Bali. Yeah. So no, I will pass on that one. Thank you, Sean.
Fair enough.
Now, up next is the Fear and Greed Daily interview with Paulo Costa, Senior Behavioural Economist at Vanguard.
Yes, all about the FIRE movement. That's the Financial Independence Retire Early movement. If you want to quit your job just a little bit early, listen to this interview.
Yeah, absolutely. And it's, of course, we're not an investment podcast, but it is worth having a listen and then getting professional advice before you make any decisions. Also, Sean, worth a mention, it is Wednesday today. So that means there is a new episode of our other podcast, How Do They Afford That? And this week's episode is all about rent vesting, which is all rent investing, if you don't like joining your words together, all about kind of renting where you want to live and buying where you can afford to do it. And it's just a way that a lot of people now are finding a way to get into the property market. So it's worth a listen. You can find that wherever you listen to podcasts as well. Thank you very much, Sean.
Thank you, Michael.
It's Wednesday, the 15th of March, 2023. Make sure you're following the podcast. Join us online on LinkedIn, Instagram, Twitter, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.